Hello everyone, welcome back to my channel, the Investing Iguana, where I share with you tips and tricks on how to grow your wealth through smart investing. If you're new here, please hit the subscribe button and the bell icon so you won't miss any of my future videos. And if you're a returning viewer, thank you so much for your support and I hope you enjoy today's content. In this video, I'm going to talk about how to invest in gold and silver in Singapore, a safe haven for your money. Gold and silver are precious metals that have been used as a store of value and a medium of exchange for centuries. They are also considered as a hedge against inflation, currency devaluation, and market volatility. Many investors like to have some exposure to gold and silver in their portfolio, especially in times of uncertainty and crisis. But how can you invest in gold and silver in Singapore? What are the different ways to gain exposure to these metals? And what are the pros and cons of each method? Well, that's what I'm going to cover in this video, so stay tuned till the end. Before we dive into the details, let me give you a quick disclaimer. This video is for educational and entertainment purposes only. It is not financial advice or recommendation. You should always do your own research and consult a professional before making any investment decisions. Alright, let's get started. There are basically 6 ways you can invest in gold and silver in Singapore. They are 1. Buying and selling physical gold and silver. 2. Buying gold and silver certificates. 3. Opening a gold or silver savings account. 4. Investing in a gold or silver exchange traded fund, ETF. 5. Trading gold or silver contracts for difference, CFD. 6. Buying gold or silver jewelry. Let's go through each of them one by one. The first way is to buy and sell physical gold and silver. This means you actually own the metal in the form of bars, coins, or wafers. You can buy them from reputable dealers or banks, such as UOB, which sells gold bars, coins, and wafers at competitive prices based on the international gold price. You can also sell them back to UOB or other buyers at any time. The advantage of buying physical gold and silver is that you have direct ownership and control over your assets. You can touch, feel, and see them. You can also store them at home or in a safe deposit box for easy access. You don't have to worry about counterparty risk or management fees. The disadvantage of buying physical gold and silver is that you have to pay for storage, insurance, and transportation costs. You also have to deal with the hassle of finding a buyer or seller when you want to liquidate your holdings. You may also face liquidity issues if there is low demand or supply for your metal. And of course, you have to be careful of theft or loss. The second way is to buy gold and silver certificates. These are documents that certify your ownership of a certain amount of metal stored by a third-party custodian. For example, UOB offers gold certificates that are sold in kilobars up to 30 kilobars per certificate. They do not expire and can be exchanged for cash or physical gold at any time. The advantage of buying gold and silver certificates is that you don't have to worry about storage, insurance, or transportation costs. You also don't have to deal with the hassle of finding a buyer or seller when you want to liquidate your holdings. You can simply go to UOB or another issuer and redeem your certificate for cash or metal. The disadvantage of buying gold and silver certificates is that you have to pay for service charges and GST. For example, UOB charges a flat 5 Singapore dollars per certificate and a service charge of 72 Singapore dollars per kilobar per annum. You also have to trust the issuer and the custodian to keep your metal safe and secure. You may face counterparty risk if they go bankrupt or default on their obligations. The third way is to open a gold or silver savings account. This is an account that lets you buy and sell gold or silver without taking delivery. The holding is in grams or ounces with a minimum transaction of 5 grams for gold or 10 ounces for silver. For example, UOB offers Gold Savings Account, GSA, and Silver Savings Account, SSA, that allow you to trade online or at any UOB branch. The advantage of opening a gold or silver savings account is that you don't have to pay for storage, insurance, or transportation costs. You also don't have to deal with the hassle of finding a buyer or seller when you want to liquidate your holdings. You can simply trade online or at any UOB branch at any time between Mondays to Fridays 8 a.m. to 11 p.m., excluding public holidays. The disadvantage of opening a gold or silver savings account is that you have to pay for monthly service charges. For example, UOB charges 0.25% PA of the highest gold balance each month for GSA and 0.375% PA of the highest silver balance each month for SSA. You also don't have direct ownership or control over your metal. You have to rely on UOB to keep your metal safe and secure. You may face counterparty risk if UOB goes bankrupt or default on their obligations. The fourth way is to invest in a gold or silver exchange-traded fund, ETF. This is a fund that tracks the performance of the metal price or an index of metal-related companies. You can buy and sell units of the fund on the stock exchange like any other stock. For example, SPDR Gold Shares, SGX, 087, is an ETF that tracks the price of gold and is backed by physical gold held by a custodian. iShares Silver Trust, SGX, IAU, is an ETF that tracks the price of silver and is backed by physical silver held by a custodian. The advantage of investing in a gold or silver ETF is that you can gain exposure to the metal price or an index of metal-related companies with low cost and high liquidity. You can buy and sell units of the fund on the stock exchange like any other stock. You don't have to pay for storage, insurance, or transportation costs. You also don't have to deal with the hassle of finding a buyer or seller when you want to liquidate your holdings. The disadvantage of investing in a gold or silver ETF is that you have to pay for management fees and brokerage fees. For example, SPDR Gold Shares charges an annual expense ratio of 0.4% and iShares Silver Trust charges an annual expense ratio of 0.5%. You also don't have direct ownership or control over your metal. You have to trust the fund manager and the custodian to keep your metal safe and secure. You may face counterparty risk if they go bankrupt or default on their obligations. The fifth way is to trade gold or silver contracts for difference, CFD. This is a derivative product that allows you to speculate on the price movement of the metal without owning it. You can buy or sell CFDs based on the spot price, futures price, or options price of the metal. You can also leverage your position by borrowing money from your broker. For example, IG offers gold and silver CFDs with competitive spreads and margins. The advantage of trading gold or silver CFDs is that you can profit from both rising and falling markets. You can also leverage your position by borrowing money from your broker, which can magnify your returns or losses. You don't have to pay for storage, insurance, or transportation costs. You also don't have to deal with the hassle of finding a buyer or seller when you want to liquidate your holdings. The disadvantage of trading gold or silver CFDs is that you have to pay for financing costs and commissions. For example, IG charges an overnight funding fee and a commission fee for each trade. You also face high risk and volatility due to leverage and market fluctuations. You may lose more than your initial deposit if the market moves against you. You also don't have direct ownership or control over your metal. You have to trust your broker to execute your trades and keep your money safe and secure. You may face counterparty risk if your broker goes bankrupt or default on their obligations. The sixth way is to buy gold or silver jewelry. This means you buy items such as rings, necklaces, earrings, or bracelets that are made of gold or silver. You can buy them from reputable jewelers or online platforms such as SK Jewelry, Love & Company, Goldheart, Pohang, Citigems, etc. The advantage of buying gold or silver jewelry is that you can enjoy the aesthetic appeal and sentimental value of your items. You can also wear them as accessories or gifts for yourself or others. You may also benefit from the appreciation of the metal price over time. The disadvantage of buying gold or silver jewelry is that you have to pay for design, craftsmanship, and branding costs. These costs can make up a significant portion of the item's price and reduce its resale value. You also have to deal with the hassle of finding a buyer or seller when you want to liquidate your holdings. You may also face liquidity issues if there is low demand or supply for your items. And of course, you have to be careful of theft, loss, or damage. So these are the 6 ways you can invest in gold and silver in Singapore. Each of them has its own pros and cons, and you should choose the one that suits your risk appetite, investment objective, and budget. You should also do your own research and consult a professional before making any investment decisions. I hope you found this video helpful and informative. If you did, please give it a thumbs up and share it with your friends and family. And if you have any questions or comments, please leave them below and I'll try to answer them as soon as possible. Thank you for watching and I'll see you in the next video. This is the Investing Iguana, signing off.